The way Ashok Leyland's numbers are flashing on your screen, net profit has come in at 575 crores. This is significantly better than what was expected. On the revenue as well, there seems to be a beat and the stock has moved up. Sonia is here to break the numbers down for us. Sonia, initial numbers definitely look quite good.
Oh, absolutely. This is the first auto number that has come through for the sector and it's looking very good. So the net profits, as you rightly pointed out, net profits and revenues actually better than what the street was estimating. On the top line growth, despite just a 4% growth in volumes for the commercial vehicle sector, the revenue growth for Ashok Leyland has been 14%, coming in at 8,189 crores. This signifies that the price hikes that the company undertook led to higher realizations and hence that led to a top line growth of around 14%, which means that it's trickling in from the top line and overall it's a very good set of numbers coming through. Now on the profitability as well, you can't really compare it year on year. Same time last year, the base was very low. The profits were just about 60 crores. So it looks like a very huge jump in profitability. If you compare it sequentially, right, the last couple of quarters, the profits have been anywhere between about 350 to about 700 odd crores. So compared to that, this number is lower sequentially on the profitability side, but on a year-on-year, it's a big jump that we've seen. We're just awaiting the margin numbers. Now, this quarter around, the margins were expected to come somewhere to the tune of around 9% odd. This will be a big jump on a year-on-year basis, although sequentially, the margins were expected to drop from that 11% mark that they hit last quarter. So, good numbers coming in. Remember, there were two things that aided the revenues this time. There were price hikes, due to which the realizations have gone up for Ashok Leyland. And the other thing is that discounting has gone down for the sector on the whole, and that has aided the both the margin as well as the top line numbers for Ashok Leyland. The other thing is that the interest expenses for Ashok Leyland have gone down in this quarter, and that has aided the bottom line as well. So all in all, good set of numbers. I'm just awaiting the margin figure. If you have that, it would be helpful. But as of now, the top line and the bottom line number are better than what the street was estimating. And remember, the stock is sitting at almost a 52-week high. So if you pull up, a 6-month chart of the stock, you'll realize that it's had a big run up, perhaps because of the improvement in volumes for the sector. That's the 6-month chart. It's almost a 30% run up in 6 months. But from the lows in March, it's been, a 50% run up that we've seen. And you've also had an improvement in volumes, lower discounts, lower raw material costs and price hikes. So combination of factors. That's the EBITDA number, 820 crores, which is higher than what the street was estimating.
The margin is also coming at 10% is what the director is just alerting us there, 10%. So that's also significantly higher than what we were expecting of around 8.7%. So whichever way you look at it, seems to be quite a beat on the numbers there.
Oh, absolutely. And the core EBITDA number, right, it's a 150% jump year on year. Although, like I said, year on year numbers don't make sense because the base was very low last year. A 10% margin is very healthy because if you look at the preceding 4 quarters, last quarter it was 11%. But if you compare the preceding 3 quarters, Ashok Leyland has always hovered between that 5 to 8% band of margin. So this 10% number is much higher than expectations and much higher than the preceding quarters as well. So all in all, very good set of numbers.
Okay, very good set of numbers. 3% higher on the stock after the run-up that we've already seen, like Sonia was pointing out. But with that